welcome to the Assay TV. My name is Brett Stevenson, editor of the Assay. I'm today here with Chris Berry, president of House Mountain Partners from New York. Chris, good to chat with you.
Good to be with you, Brett.
We're doing this over work from home, so to speak, right now, but wanted to just kind of discuss with you a little bit and kind of talk about battery materials during this kind of interesting time we're facing, extraordinary time, once in a generation time, just a little bit. And so I just wanted to maybe kind of go through what you're seeing, right, your observations right now in kind of the battery metals space.
Sure. Look, I think that it is once in a lifetime, as you mentioned. I mean, once in 100 years, whatever the phrase you want to use. I mean, none of us in this space have ever seen anything like this. And so, you've got this interesting situation where, the demand for battery minerals and the supply chain is growing at double-digit rates, and that's all exciting, and we've all sort of banked on that going forward. And all of a sudden, out of left field comes this pandemic, and basically the entire economy, not just the lithium-ion supply chain, is completely frozen. And so I think that, it's really tough to now think about what's going to happen in 2020 when we're all trying to figure out what's going to happen tomorrow or, even next week or next month. I mean, I think to be, cut right to the point, you can sort of take your forecasts for 2020 in particular and just throw them out the window and start over. I guess my view is that, just with respect to the battery minerals space, and, that's obviously lithium, cobalt, graphite, and even copper and nickel, some of the larger bulk metals. I think that, you probably aren't going to see much of a pricing recovery or an upturn until probably mid to late 2021 at this point in time. I just think there's so much indecision in the market right now. I don't think that this EV revolution is denied by any stretch of the imagination, but it's certainly delayed, and probably delayed for at least another, 12 to 18 and perhaps maybe even 24 months if we're unlucky.
Yeah, so you're thinking that this is kind of more of a temporary pause, I guess, so to speak, in the kind of the EV development.
Yeah, I'd say it's a bump in the road. It's a big bump. Anytime you have to sort of throw away forecasts and kind of rethink the framework around investing here, which is what we should all be doing, it's a serious issue. But you've got, everyone sort of asked me, well, what's going to change your mind about this push towards electrification, and of course, the integration with renewables and batteries. And I think you'd need to see a couple of things. You'd need to see, obviously, China completely turn their back on this push towards owning these next generation supply chains. And really focusing, I think, on Asia, quite frankly, because that's really where the demand is going to be coming forward. But I do think that supply chains in particular are going to have to get more flexible and more robust coming out of this. And I think ultimately that's going to be a pretty positive takeaway when we look back on this in 5 or 10 years.
Yeah. And so, like, for miners though themselves, what do you think they ought to be doing this time? I mean, we were just chatting before this, a little bit about Blackstone Minerals. They had a very special day earlier this week, and it just shows that, there's more of a 20-year look at what miners should be doing, particularly like in the nickel space, or if you're copper. What are your thoughts on that?
Yeah, I think, it's typical investors obviously, don't have a 20-year view. That's where the strategic players come in that do see EV penetration increasing ultimately relative to internal combustion engine penetration over the next few years, a decade, I should say. What should the miners be doing? Obviously now it's all about cash conservation. We've seen, Glencore kind of rein things back in Zambia. This morning, actually, my morning, your evening, there was a lithium project in Argentina that's now mothballed. I think you're going to see a lot more of that, unfortunately, going forward, partially because, the economics just don't dictate some of these projects are going to be able to go forward, but also, except for a pool of strategic capital is floating out there, I think it's going to be really hard for a lot of the miners to raise money, despite the fact, again, that demand for the battery minerals, I should say, continues to grow pretty strongly. So, what should the miners do? I hate to say this because it's not particularly actionable, but, rein in the spending, be very strategic and focused about, how you do spend the capital that you have. And this is just something that we're going to have to wait out.
Mm-hmm. And what will, in your view, you're looking into mid 2021, what would that recovery maybe look like?
Well, I think, we'll have a lot more clarity around regulatory issues with respect to EV adoption and penetration, and of course, stimulus. I mean, you've got upwards of 11 or 12 trillion US dollars of stimulus that's being pumped into the global economy right now, or at least has been announced that it's going to be pumped into the global economy. So, within a year, obviously that liquidity presumably will have taken hold and will have generated some semblance of economic growth. So, you sort of want to see how the stimulus is rolled out, both inside and outside China, number one. And then also, just the regulation in general. I mean, I think that how China in particular, or even, the European Union uses a mixture of carrots and sticks to incentivize EV adoption is going to be very important. I think you'll see some changes there. And then ultimately, I think the big tell for me would be, and it's always has been, is looking at battery costs, okay? Costs in terms of dollars per kilowatt hour. When you see that start to level off or, God forbid, turn up, then you've got a problem. But that phenomenon, that sort of cost deflation that I always watch in the battery space just hasn't happened, and it doesn't look like it's going to happen anytime soon. So keeping an eye on some sort of metrics around stimulus and, of course, the trajectory of battery costs, I think is really important right now.
Okay. And rare earths, what do you think on how that has been going? I know that last year we had, the rare earths being interjected into the U.S.-China relationship and the trade war. The trade war is still going on. Technology is just kind of maybe hitting a pause, and maybe there was a little bit back and forth between the U.S. and China about this pandemic. And how do you see rare earths kind of, is the U.S. still going to be very interested in that kind of technological and supply chain decoupling from China, even after this?
I think so. Regardless of what happens in November of 2020 with the election, I think that, if Donald Trump has done anything, and, he's obviously a divisive figure, no matter where you are, he has put this relationship, this economic relationship between the U.S. and China right at center stage. And I think that will continue going forward after, we've passed through the worst of COVID, and of course, after the trade war, presumably, gets resolved. And I don't really have a forecast or an idea of when that might happen.
Yeah.
But nevertheless, look, rare earths are a strategic mineral, whether or not you're Chinese or American or European or what have you. And so I think, again, coming back to what I alluded to earlier, I think that strategic minerals like rare earths, like lithium, like cobalt are going to be a centerpiece of rejiggered or reconfigured supply chains going forward. There is a move. I'm sitting here in Washington, D.C. this morning. The rare earths are clearly on the radar, whether or not you talk to the Department of Commerce, the Department of Defense, the Department of Energy. And so there is an awareness and a realization of this dependency of these critical minerals. And so, again, it's just an interesting time because you've got a pandemic, you've got a trade war, you've got a presidential election coming up, and we're all trying to figure out where this sort of new idea around supply chains fits. But I think that, again, if there is a major takeaway from everything that's happening, it's going to be that supply chains are going to become more regionalized and perhaps smaller and more robust because of it.
Maybe I just wanted to kind of, while we're talking about rare earths, we can pivot a little bit more to some of the individual metals, a little bit, your expectations, and maybe let's start off with cobalt, where you think things are going there.
Cobalt's interesting. If we were having this conversation in 2015 or 2016, I would have been pounding the table, outrageously bullish, very excited about it for all of the reasons that ultimately came true, right? Its critical nature in batteries, so on and so forth. And of course, look, it's probably, of all of the battery metals, I find it the one that's the most interesting because it really does have this geopolitical and sort of socio-economic element to it, in the sense that, and I'm not going to belabor the statistics here, but it comes from the DRC, the majority of it does. And the economics, to a certain degree, I think dictate that it will always, the majority of cobalt will always come from the DRC, which is a problem if you're VW or Tesla or any automaker for that matter, because you're trying to burnish your green ESG credentials right now. And who wants to be linked with artisanal or child mining in the DRC when you're trying to say, look at how clean and green we are. So, I think the issue with cobalt right now is you've literally got every battery scientist known to man trying to figure out how to engineer cobalt out of lithium-ion batteries. And obviously, look, there are chemistries that allow you to do that, but you run into energy density and thermal runaway issues. So I ultimately see a cobalt market that is bigger than it is today. I've always said that. But you're going to see a situation where, because batteries are advancing from a tech perspective, you'll use less cobalt per battery, but ultimately more cobalt overall. So that opens the door to, potentially higher prices. But I also think battery recycling is going to become a bigger issue in a number of years as well. And that is in part made relevant because of this cobalt issue. So used to love it. Now I sort of like it, I think would be the way to put it.
Okay. Copper.
Copper is probably my second favorite right now behind nickel, I think.
Starting from the top.
Yeah. Look, I mean, copper really is a barometer of, I guess, global industrial health. It looks like we're just sort of hanging on above maybe $2, $2.10 a pound right now. You've got a situation where Chile is going to have to invest upwards of 20 or $30 billion just to sort of continue producing, I think, at current rates, maybe some expansion down there as well. But I think the issue with copper is, look, you've got some particularly high CapEx commitments that need to be made and this goes way beyond EVs, by the way. This is just global sort of industrial demand. A lot of money needs to be spent right now, and you're also seeing some COVID-related delays in the copper space as well. So again, longer term, I really like it. I think you could probably see us getting to that, elusive $3 a pound copper mark, but again, not before, say, 2021, late 2021, 2022. There's just too much noise in the market right now on all of these metals to really, I think, make a really compelling case for higher pricing.
I see. Lithium.
Yeah, lithium, look, I've always called lithium the belle of the ball, right? Because that's the one that, above all others, I think you obviously need for the battery business. I think my sort of longer term outlook or pricing forecast for lithium, and I'm sort of loath to make forecasts because they're almost always wrong, but generally speaking, when you look at overall demand out to 2025 or 2030, I think you really see a $10,000 to $11,000 a ton floor. And of course, we're much lower than that today, depending upon which lithium chemical you're looking at. But I think lithium prices are going to have to go a little bit higher than where they are today. That has everything to do with the fact that lithium is not really a commodity. It certainly has behaved like one in the last couple of years because of the pricing dynamics, but producing battery grade material is not easy, and producing it at scale adds another layer of complexity. And so you've seen existing players like Albemarle and SQM and Livent all have challenges in terms of ramping their existing capacity. So it's not easy for the people who allegedly know what they're doing in this space, okay? So we know that. We also know we're going to need additional supply from sort of a next wave of newcomers. So I think, you're going to see a lot of teething problems in the lithium space, and against the backdrop of ultimately increasing demand because of EVs and energy storage. So, you're ultimately going to see, I think by 2025, maybe a little bit later, an $11,000 a ton lithium price. I think that's where we ultimately settle in this kind of new normal.
I see. Okay. Terrific. And maybe round it out with nickel, and then maybe if you want, there's some other, like manganese or vanadium if you want.
You can
but just
go all day, yeah.
nickel.
Yeah, no, look, let's just stick with nickel. I think nickel is my current favorite right now, just in terms of, again, it's critical use in the battery business. Again, I don't want to belabor the points. I'm sure a lot of the people watching this already know about the move towards nickel heavy or nickel intensive cathode technology. So, that is where this industry is going. Not all nickel is created equal, just like not all lithium is created equal. Again, bringing on a new nickel project is extremely high from a CapEx perspective. And so I think, again, you're going to run into a lot of these problems, whether or not it's capital raising or just ramping these projects in time to match up supply with demand going forward. And I just think that ultimately nickel prices are they're going to have to go much higher actually to satisfy bringing new high capex projects on. So again, I hate to say this, it's a little bit of a wait and see, but I'm really bullish on nickel going forward.
All right, yeah, bullish on nickel. Okay, all right. Well, yeah, if you wanted to talk more about some of the other metals, you're welcome to. If there's anything that strikes your eye, not at all.
Yeah, look, I mean, I've sort of spent my career the last 10 years focusing on a lot of what we've talked about, right? The rare earths,
Yeah.
the vanadiums of the world, a lot of these, the scandiums of the world, a lot of these minerals are critical, but small, okay? And yes, they're growing faster than, the coppers of the world or the iron ores of the world, and that's what makes them exciting.
Yeah.
I think, when I look at these niche metals like vanadium, there's a really interesting technology component to it. And so I spend just as much time trying to understand the dynamics and the supply chains around, for example, vanadium redox flow batteries. What are the economics? What are the new financing models? How does it work? I think that's how the money gets made going forward. I mean, to be blunt and be honest, there's plenty of lithium out there. There's plenty of vanadium out there. There's plenty of these niche metals and minerals. We know where they are. We have decades of supply, even at current growth rates. What everyone's trying to figure out right now, and I think the next sort of part of this game is how do they fit as supply chains rejigger, and of course, as the technology continues to advance. Again, batteries are getting cheaper, whether or not you're talking about vanadium redox or lithium ion. So I think that, investors would probably do themselves a favor by focusing on multiple parts of the supply chain. What do the economics look like? And, that offers a nice hedge and a hedge, I should say, from these, pretty violent pricing cycles that we've seen. It's sort of like the more things change, the more they stay the same. And that's really been the story with the battery metals going forward. So, a longer term focus on economics across the supply chain with the admission, actually, that when you think about margins, operating margins, there's no question that the miners are the stars. The margins there are, historically, and I think going forward, going to be the best along the supply chain. And of course, it's a risk-reward paradigm. So, but that doesn't mean that you should ignore cathode or, battery technology as well. I think that those incremental improvements are going to be really, really powerful going forward.
Oh, excellent. Good to hear. I just wanted to say thank you for joining us today. I think I really enjoyed the conversation. We're, living in the new world of webinars and kind of doing this. I'm in Hong Kong, you're in New York, and having to kind of do this at irregular hours and whatnot. But I just want to say thank you for joining us, Chris.
Well, thanks for having me. It was great.
Terrific. Thanks.